What's up guys, it's Selka and today I'm making a Bitcoin analysis. So I was supposed to do Bitcoin, Ethereum and some other coins, and it's actually my second time doing the intro, but I took too much time talking about Bitcoin and the video was long enough, so I just decided that I will only be doing Bitcoin today. But trust me, the video is super useful, super helpful if you're just getting into the wave theory, and I'm explaining a lot of stuff, so feel free to watch it until the end and see you next time. Alright, so we're gonna go into the smaller time frame in a second, but before I get into it, I just want to talk about the bigger time frame since I've talked about it pretty quickly in my last video. But of course, like I said, since we broke that top, now this is bullish, and you know, I've made a video talking about Bitcoin and what I expect in the bigger time frame, and nothing has really changed, guys. This is looking bullish. We're gonna go high, in my opinion, and before we get into that move, we must have our correction right there, and this is what we'll be looking in a second. Now just keep in mind that for Bitcoin, we will see the price go up for 2023. It won't be in a straight line, it won't be like this in my opinion. It will simply range but go upside, so maybe something like this. You see that first impulse, give it some range, right, and give another impulse, maybe something like this, but at the end this is looking upside. This will go upside. Now there's a chance where this is a correction that is done, which is an expanding, and you see them in the top right corner. It's possible, all right? I know many people thinking that this is the main scenario. It can be, and in that case this is going to go up and break the top. Now if you want to play it safe, see this move as the first retracement of that whole impulse and see the next move as a correction, like I'm saying, like I said earlier. So now what I'm waiting for is a small correction right there to give our a thing to make sure that we're going upside. Small correction like this, all right, and then we're gonna have another up move. Now this whole up move that we're gonna get will probably be the first impulse of a bigger correction and then another impulse, which can be the case just like we see for Ethereum. So let me just put Ethereum, you'll see this right there. So it can be something like this. We're in the first step of that impulse, right? Something, you see it, impulse, correction, impulse. It can be that, but I do think that we're gonna get to see it, and for that just complete this correction, take the up move, and then see how far this up move goes. If we have momentum like this one has a lot of momentum, had a lot, and now it's ranging, which is okay because we broke that top and there's people trying to sell right there. People will be trying to sell right there. Of course, this is the tops from previous correction, and that's why you get some reaction at those top. Now the good news for Bitcoin is that we broke this top, all right, and let me tell you why it's important. It's because this was the last bigger correction we had for the downtrend. So of course, when you get a reversal, you must break a correction you had uptrend in the downtrend, and it's normal because you see, if you get downtrends, sometime you will have a returnment, and this returnment has to break your correction that you had during the downtrend. To make sure you're into an uptrend or switching your trend from downtrend to uptrend, you must at least break the top and make higher highs and higher lows. And to get into that point, you must break the correction from the downside, and that's what I'm saying right there. We needed to break this correction and that one, all right, so that one was kind of easy. We've got that's why we've got some reaction right there, simply people right there and right there trying to sell, and it's normal, but we break it, and this was a correction that we broke down in the smaller time frame, so this was planned, all right. You can see it when you're having correction or having some reaction over those tops. We can see if that's a correction or that's a potential returnment, all right, and that's why at this zone I said right there this was a correction for upside, and you can go check back the video. You'll find out that to me this was a correction for upside, but I was careful of a bigger correction which could happen at any moment in these tops, simply because sometimes you're losing in momentum and you will have many people trying to sell, and that's why you'll get a bigger correction, and that's why I think we are into that bigger correction. Now I'm trying to explain a little bit more why I'm thinking the way I'm thinking, and also because I didn't make a video for the weekly analysis this week. So I'll take time to show you and to explain a little bit more what are my thoughts regarding this structure. So like I said, this top was important to break because it's a running flat. So this is a correction for a down move, which is this one. This down move, this correction right there, and then you get the other down impulse. So it always comes in pairs for the impulses, and the correction is left alone. So you see that impulse down comes with that impulse down, that impulse up comes with that impulse up, that impulse down comes with that impulse down, and you have the correction left alone. So that's just a breaking out of me breaking down this pattern, but you have them in the top right corner. And again, you can always join my Discord, link in the description. If you want to ask question, if you're interested in learning more about those patterns, feel free to ask the question down below in the comments or in my Discord. It will be a pleasure for me to answer you. But now you get this pattern right there. This was the top of your correction in the Dow trend. So when you break this top, that's a sign. And when you give a correction near that top, that's also a sign. We got a correction, come back, it come up and broke the top. Now this was a sign. We will have some sort of reaction simply because this was losing in momentum. But we didn't break the top, and since now we got this first range, for this first move is starting the range in my opinion. All right, this first impulse up also that came and break the top right there. This means, all right, simply this means that we broke that top. Now we have less chance of retesting the low. So I think this is the bottom as of right now, unless you have a catalyst, something big happening, World War III or something, and this does like this. It's still possible. Keep in mind that in the wave theory, this could be an expanding, just like in the daily chart. We could see this whole pattern right there as an expanding. So this as an expanding, which is one of those correction, but it doesn't happen a lot. And the more your B is corrective, the more you can expect this pattern. And as you can see, our B wave, if it was that, it's not that corrective compared to this C wave, which is kind of possible, but to me, I'd rather have something that looks like this to try to do to go for an expanding than something that looks like what we have right there. So let me show you an expanding, so you get why I'm thinking that Bitcoin could not be doing an expanding at the moment. So you see, this is an expanding for Ethereum, for example. You get this drop and you get that range. So we clearly know that this is a correction. You see how it ranged and then another impulse down. So even if that impulse came and broke the low, and that impulse, that correction up came and broke the top, this is an expanding because it's clear. You're having a drop, a correction, a drop, and now it's clear. It's clear because this is a correction. Either way, it cannot really be an impulse. So you know that you must be going for the expanding. But sometimes when it's looking like this, it's not clear anymore, right? It can be an expanding, but it's not clear anymore. So I hope you get the difference. I'm not gonna lose too much time on it. Just let you know that the expanding is still possible, but now in the daily chart, I think the expanding in the daily chart, this one right there in the weekly chart to come and retest the top has more probability than this expanding to come and retest the low, because this to me looks like a correction on its own. And if that's the case, the fact that it broke the top makes a new structure. So you get a new structure and you start with your impulse, correction, and impulse again. So there's almost no chance that this is a structure with the three piece right there. There's more chance that this is a correction on its own, correction on its own, and then came and retest the low, and this is your bottom. All right, so if that's a correction, that means that this is not your bottom. But now I'm telling you, I'm seeing this as a correction on its own, so this is your bottom. So right now I'm thinking that this is the bottom, and I'm expecting this correction to end. So quickly, just seeing like this, the correction should be something like this, all right, and go up. I think we're gonna break this one, and we might even break that one. So if we break that one, that's another sign that we're going for a bigger structure. Every time you break those big correction, that's a sign that you're going for an even bigger structure. So for now, it's a daily move. If it does something like this, it will be a daily move, all right? But if you see it do something like this, and break that top. Now it's starting to be a weekly move. So I hope you can get this difference in time frames and stuff. I know it's not super easy to understand, but depending on the correction that you break, and I can tell you right now, this is a top of a correction, a top, a top, a top, and a top. And the way I know it is that this is a regular flat, this is a triangle, regular flat, correction, and this is a running flat. So I know every tops that we have, and every time we're going to break a top, we're going to increase the chance of going up. And this is a running flat also. So you break that one, you increase the chance, you break that one, you increase the chance until you get that correction, and this will be your final opportunity to retest the top and be on the upside. So we'll see it. All right, if that's an expanding, you'll see it will do something like this, give a range and go up. But if that's a B wave, you'll see it range, and we will have time to see that. All right, just letting you know right now that we will have time to see if we're gonna retest the top and it's gonna be a bull run or not. Now getting into the smaller time frame, I think it's time. We've been talking a little bit too much right there, but see, this move right there is exactly the same move as this one. Exactly the same. We're gonna see it exactly the same way. You have an impulse, you have a first retracement. You got a slow move up, it breaks the top. All right, so let me remove that. You got an impulse, you got a first retracement. So you got a slow move up, it breaks the top of the first retracement, then it gets another spike down, but it doesn't break the bottom of the first retracement. So this whole piece is an ABC correction. All right, it's called a regular a running flat, and this aims to come and at least break the top. So we don't know how much it will break the top, so it will break like this or just tag it. We don't know. We just know that it will at least break the top. So if you want to take this trade, entry right there on a setup, stop loss under that A, and TP right there. So TP, at least I'm taking 60 to 70%, but this is a TP that you should take, because sometimes it tag the top and go back down, and you don't want to be in the trade. If it does that, you want to take profit. So some TP right there, and next TP comes when you get another correction like this one, for example. Next TP will be there, and you will put your entry, your stop loss that was right there. You put it above this entry. All right, so you don't lose the trade. And every time you get a correction, you move that stop under that correction. Correction right there, you see, correction, move that stop under that correction. So let me clarify this. Stop loss was there, you get that impulse. Now you didn't move the stop loss yet. You can move it above your entry if you want to play it safe, but you took profits. All right, now you get another range, another correction. We know about this one. This is a regular flat. So correction, because of that correction, you take this stop loss, you move it right there. You get an impulse, breaks the top. Just like I said, every time you have a correction, your goal is to break the top and take TP at the top. So you take TP right there, you move the correction, you move the stop loss under, wait for the other correction. This was a running flat. So you move it right there, and you do that until until you get your stop loss hit. And if you get hit, that means that you're going for a bigger correction, just like this one. So now you just chase back opportunities if you know that's an A move. So if you know that this is your A move and you're not in the trade anymore, you take your opportunity back, get into the B wave, and you just get into those setup like this, avoiding the big loss and taking small profits time by the time. So that's just a tip. All right, I know people are asking me to do this sort of stuff, so I'm talking a little bit more about strategies with theory and method, but this is just for your information. Nothing has to do with the chart. But for that one right there, it's important to know that, okay, from that point, it's important to know that in my last video I told you that these were small correction. For example, this that came and broke the top. All right, and at this point, this move right there is the start of a bigger correction, because you broke those low. You didn't break this one, but it's not important. The one that are important are these one, and because of that, this is probably an A move. So most of the time this will be an A move. Now you got this A move, that means that this is a first retracement of a bigger impulse, and I'll show you which impulse. It could be all that impulse right there. So if you have all this impulse, you have this big retracement at an A move, you're waiting for a B wave. B wave can be a corrective structure that you can barely see the impulses in it, or it can be a part of a 3 wave. So you can have B wave looking like this or looking like this. All right. For instance, the one that looking like our B wave is probably this one, and the fact that we've got an impulse and another impulse makes that the B wave that we'll have won't be this one. It's not this one, is this one. So there's 2 waves of seeing a B wave. Either way, your B wave needs to be as corrective as possible, which means that it should take more time than your impulse. So if you have this as a B wave, your impulse will take this time, your B wave will take longer time. So now the chance of this being an A move are super accurate. Now this, you're getting another impulse. At this point, what are you doing? You're waiting for the correction. So if that's not this impulse that is getting correction and you're getting another impulse, that means that the next impulse that you're getting will have its correction. So even if you had this, for example, let's say for example you had this retracement just like this one, you had this impulse and it didn't make a correction right there, it made another impulse down. You're asking 2 questions to yourself. Either it's a correction or for another drop and you make a bigger structure. Let's say you have the same at the impulse before. I'll draw it so it's pretty interesting to understand. But let's say you have this impulse just like this one. You have this drop just like this one. All right. And you get another impulse just like this. So what would happen if this was not a correction and this was an impulse? So you either see this move as a running flat, or you wait for the correction to happen and make sure that this is not a running flat anymore and this is either a correction on its own to go up or the start of a bigger correction. So right there, we knew that any moment we would have a correction. All right, if that's not right there, then it will be a correction later on, something like this. If we meant to have another impulse, if it was meant to have another impulse, then we will wait for the correction at every time, simply because we cannot trade on impulses. We need that correction to trade as a wave theory users, and this was the correction. This is what we were waiting for, and it happened after having another impulse in the other direction from the first retracement, which can happen. And that's why I'm telling you guys, when I saw this impulse, this retracement, this impulse, I knew there was one way to get out of this structure, and is getting a correction. After the correction, you get another impulse, and this whole piece becomes your B wave. So like I said, either you have a B wave like this, or you have a B wave that's clearly 3 wave. All right, so now we know our B wave will clearly be 3 wave. So when this correction will be done, we'll have an impulse, right? It can be done right there, as long as this bottom is not broken. So this is the super important bottom. As long as this one is not broken, this correction can range as long as it wants. I don't really care. We will have this up move. And I'm telling you right now, guys, as long as this bottom is not broken, this has 90% chance of having as an up move. So that's why every lows you look for buy setups. Now this is in 4-hour chart. We're gonna zoom in to know if this move is ready to go up, but that's a clear rule. As long as this bottom is not broken, we look for an up move. You have this retracement, this impulse. This is clearly a correction because clearly this move is ranging in between those 2 lines, and it takes more time than this impulse and almost take more time than this impulse. So there's no way that you don't see this as a correction. And now that you know that this is a correction, 90% the chance of having an impulse after getting a correction if you have an impulse before. So impulse, correction, 90% chance that you have an impulse. So it's clearly going to go upside. Now, is it ready to go upside? We'll see that in a second. But I'm telling you guys, this move reminds me of another move, which was on Bitcoin too. All right, you see you have an impulse down right there. You have an impulse down, and another impulse came and break the top, and now it's ranging. So I've seen this quite some time on Bitcoin, and I remember, for example, this one. So you have an impulse down, another impulse that came and broke the top. We were waiting for the correction, and I remember You can check my videos. At this moment I told you that as long as this bottom is not broken, this will go up no matter what. So it could go up right there, right there, right there, but as long as it's not broken, it will go up. And it didn't break it and it went up. So we were trying to find buy setups, and I think it was right there. I think there was one right there that we've got break even, so I got break even on that trade, but I took one right there to come and retest the top. So this remind me of this, and also remind me of this same thing, impulse retracement, which was an A move. Then we've got an impulse that came and break the top. So I said this will correct, then having another impulse to come and retest the top. So same thing, guys, the rules doesn't change. We always see the pattern the same way, because it's the wave theory. We have impulses, correction, and after correction comes an impulse. These rules doesn't change at all. It stays the same and forever. So if you have an impulse, you're waiting for a correction, but you keep in mind that your correction can be part of a three wave. For in instance, this becomes an impulse, waiting for the correction, then having another impulse. And after this is done, you'll have your A move right there, your B move, and we'll be waiting for a drop to make a C wave before going up. So I think this will happen, and I'm pretty sure this will happen. And if it doesn't happen, we'll get to see it, because I'm aiming for that as long as this bottom is not broken. So that's how in the wave theory it goes. You have rules, and as long as this bottom is not broken, you should go for that. So Bitcoin, I'll think I'll go in the smaller time frame right now, because you know that this will come and retest the top. So you already know, no need to FUD, even if it goes down, even if it comes to 22k, no need to FUD. But now this structure right there to me is a running flat. So same thing that what I just explained in the bigger time frame, but this one you have it in the smaller one. So you have this impulse, this first retracement. So you see how the market is fractal. Guys, this is a perfect opportunity to understand a little bit better the wave theory. So you have this first retracement, which is an A move. You've got an impulse. You've got a first retracement. So this is in the smaller time frame. This is a smaller A. So we're going to go in the 15 minutes to understand better this move, but it's same thing, all right? So you have a bigger A, but you have a smaller impulse right there and a smaller A. You get a correction, you get a drop. This is an expanding flat, and this is your smaller B, smaller C. So I'm writing really smaller because I know that this is an expanding, this is an impulse, and what comes after a correction? Another impulse to at least what? Break that top. So we tagged it and we came back down, which is normal, because in those type of range sometimes you tag them and you go back down, and also normal because you didn't complete this bigger move. You see this bigger A, it's still left alone waiting for the bigger B, which was completed by this move, because this becomes a B, all right? Either like this, or either with a move in it, all right? Either with this move in it, this becomes a B. You add the impulse, you add the other impulse, you add the impulse, you add the impulse. So it can go like this forever, all right? Let's say you have an impulse, correction, impulse. This is how fractal works in the market. You have this impulse, correction, impulse. This whole piece becomes a correction. You have this impulse before, you get this impulse after. Now this whole piece become like a correction. You get this impulse before, you get this impulse after. And it can do that forever. That's how fractal works in the wave theory, at least. So you get this smaller correction for that impulse, which led to another impulse to come and retest the top. Now this is a B move right now, and you get this retracement before. Now you were waiting for another move to come, and as long as this bottom is not broken, we're going for the regular flat, all right? And as long as it's not broken, we will retest this top. Just like for this one, we were retesting the stop right there. Now for this one, we will retest the stop right there. So I really hope you guys can understand a little bit better what I'm saying. And my next video will be more useful, as I'm trying to talk a little bit more about the technique behind this method and how it works, how you can understand it better. But all right, now we see the move coming up, but I was going to tell you right there, this was a buy setup. Okay, I'm not in it. I've seen it just right there on doing the video, but this right there was a buy setup. So how it works, it depends on how you want to take it. But like I said, you have an ABC, so this up move will at least break the top. So I'm telling you right now, this is an impulse that will at least break the top, 90% chance of happening. So this is the type of trade you want to take. You're waiting for that whole B wave and that whole C wave to happen, because you know that you're trading for the next impulse when you get correction, and you're waiting for the correction to be done before trading the next impulse. So we are users of wave theory, are specialists of correction. They wait most of the time just watching the market and waiting for that opportunity where the correction is done, and then you're tracking the other impulse. So now clearly, what are the chances of this correction not being done if you have all three moves that you're waiting for, which is an A, B, C? So I'm telling you guys, this move, I wish I could make the video before this move happened, but I'll tell you also how to take this trade. But now this was your trade, this was a running flat, and this will retest the top. So whenever it breaks the top, take profit, 60 to 70%, how much you want, as long as you protect yourself from the trade, putting your stop loss is supposed to be right there above your trade and taking profit, then you're good to go. If you take 60, 70, 80, even 100% if you want, I don't really do that 100% TP, because you never know what can happen. It can literally spike up, but you can do it if you want. If you're just taking trades like this, I think your account will grow at least. All right, now let me tell you how to take this trade. So sorry, I think it's a really in-depth analysis. I didn't thought it would be that long, but it's super useful seeing how this move goes. And I'm telling you guys, this is a running flat, super clean. It broke the top. All right, it broke better on another chart. So let me put BTC perp. I think you'll clearly see it. All right, so it broke right there better. So you see it broke the top and didn't break the low, so it's a running flat. You see it in the top right corner. That's how a running flat. And why I'm saying that this running flat has a lot of probability, and simply because the B is clear. Sometimes the trade you'll be losing on running flats and regular flat that you think looks clean won't probably be as clean as something like this, because sometimes you have this, and you have a move that looks like this. All right, how do you know this is a B wave, this is a correction wave? You cannot really know. What if this is your impulse and this is your correction, sorry, and this is your impulse, and you get your other impulse, and this makes the top and start a bigger structure? That's where you took a trade thinking it was running flat, but it was not. So the important part of all a move is always the correction. The correction tells you everything. So it's in a range that you know everything, compared to other method, compared to people thinking that it's in breakout that you do stuff or whatever. For us, we get all the information we need for wave theory users to get into a trade within the correction. That's where you get all the information you need. So if you have an impulse, you have this range, that's enough for you to know that this will go up most of the time. Now, I told you that I was going to talk a little bit more about how you take the trade. So it's simple. It's not really simple, but there's multiple way to take the trade. So you know that it's a running flat because you have this up move, this correction, after that up impulse within your range, then this came up and broke the top. So you know that this is most likely a correction because it took most of the time after having an impulse down, and because you can break it down on three parts: one impulse, one correction that you know, which is an expanding, and another impulse. So you know that you have a three wave right there, and this is a smaller A, smaller B, smaller C. Now you have a big impulse down, and this is a bigger A. All this becomes a bigger B, and this is a bigger C. So you know a different correction that happens a lot of time: running flat and regular flat. The running flat is where you break the top and you don't break the low, which is the case right there. You broke the top and you didn't break the low with that C wave, but you broke it with that B wave right there. That's where you go for the running flat. So if you didn't break the top, you go for the regular flat. But if and I'll show you an example of regular flat. This one, all right, Ethereum. So all right, so you see, I just showed to my friend how to take this trade. This was your setup, etc., etc., but I didn't take it. But now I hope he's in it. But still, this was a regular flat because this is probably your ABC right there, drop, and this is your drop, and this will probably come and retest the top. All right, so this is a regular flat because you didn't break the top and you broke the bottom of the first retracement. So that's the difference. Now we have a regular flat on Ethereum, a running flat on Bitcoin. I hope you can set the difference between both. Now for this one, what you do is, you know that if you don't break, as long as you don't break this low, this will come and retest the top. So you know that for a fact. So why don't you put your stop loss under that low? So if you know that as long as you don't break the low right there, it's going to break the top, you should put your stop loss right there. That's where the trade won't be on your favor, is if you break that low. Now if you want to know why, if you break that low, it's not in your favor anymore and you should not be taking the trade, you should get out. It's simply because if you break that low, so for some reason this starts to range and break the low, that means that this is not a running flat anymore. So it's either an expanding, or the second scenario, which is the worst, a bigger correction. So this can go deeper, and if it goes deeper, so often it will be for a bigger correction. So for example, if it started to range right there, it would have been either for this move, which I don't think would have it will be completed, but it could, or simply for a bigger correction. So something like this before breaking the top, as long as this bottom is not broken. So just like I talked about in the bigger time frame, it could have happened if you got a range right there, but you always focus the smaller time frame. So you focus this running flat. If it doesn't happen and break the low, you go for a bigger structure. If it doesn't happen and break this low, you go for a bigger structure. So always focus the smaller time frame until it happened, because this is the one that has the most probability to happen. Always the smaller time frame. All right, especially if you're that low in the bigger time frame. So especially if you're near this bottom, you're focusing the smaller time frame, because it's often going to go up towards the top within smaller piece. All right, then going down like this. There's no chance of having this in the lows. Having this in the tops are possible, but in the lows it's rare. That's why you focus smaller time frame, and when it's invalid and breaks the low, now you see why and you go for a bigger structure. So that's just a tip, but every time I'm talking about things like this, I just start talking about other stuff. But let's say we're still into that scenario where we're taking this trade. Your stop loss should be there. So if you're trading this running flat, stop loss should be there. Now where are you going to put your entry? You're going to go in the smaller time frame and see if you have an impulse and a correction that could be the start of the up move. So right there, where I would take the trade is right there. In my opinion, I would take it right there, because now you know that this is an impulse, this is a correction. You broke that correction, you're taking off. So we are just seeing this together right now. This should come and retest the top, but this was the entry. You put a limit order right there. If it stay and range under, you're not in the trade, but if it goes up, it breaks out and you're in the trade. So that's how it works. You can be more aggressive and take correction like this, but near that low, which is possible. If you take this impulse and this correction, you put your limit order right there. If it breaks through, then you're in the trade, and you know that the target is to come and retest the top. So it's possible also, but you never put a limit order right there. So sorry, you know why, and you know why I'll tell you right now. See how the movement goes. The impulse move goes always with an impulse and a correction. So if you put limit order right there, you would be in the trade. If you put limit order above that correction, you'd be in the trade. But if you put limit order in, let's say right there, for example, this is a correction to come lower, even though this could have been the start of the up move, but this was a correction to go lower, and that's where you don't want to be stuck in the correction that goes lower. So if you put your limit order right there, it didn't tag you and you were not in the trade. All right, so that's why I put limit order and wait to go higher. That's the plan. That's how you take. That's how I do it, at least, and that's how you should do it. Now I've been talking with a lot of people to try to find out a better way to get into those trades, because that's part of a strategy and not the method itself. So the wave theory doesn't tell you how really to get into a trade. that's how you want. You can use indicators, you can use whatever you want. The wave theory tells us that this is running flat and this is going to break the top, but it doesn't tell us that this is that you should get in the trade right there or right there. As long as this bottom is not broken, this should be a running flat. So you take the trade wherever you want, but it's risky to take them without having a setup. That's the only thing I want to say. You can, some people take it right there, so I'll tell you what some people do, and sometimes it works, but it really is risky. But that's how you get the most out of a running flat, is that you put, so I'll do it, I'll just do it so you guys see it, but you put this right there, trend based fib extension in the top of your impulse, and you get to the bottom of your retracement, which is the A move, and then you come back up to the top of your B wave. This right there gives you the 0.886, which is the 90%, almost 90% retracement. As often you see the C wave bouncing off that point before going up and retesting the top. So often you see that, and when it does happen, sometimes people just put an entry order somewhere right there, stop loss right there, and this go through and breaks the top. So it can be a strategy. I don't really like this strategy unless the running flat is really looking clean. For instance, this was really looking clean, and I could have done this type of strategy, but I'm more low-key trying to find impulse correction, because I know in the long run it will be better for me than doing this strategy, because sometimes it doesn't need to, sometimes it does. Like for instance, this one you could have put your all right, let me put it with you so you understand why it's risky. But for example, this one right there could have been a running flat where you tried to put this under the A wave, this above the B, and you put your entry somewhere right there. You see, you got some reaction, but it was not enough, and we came to break that low, even though the direction was safe, even though this wasn't expanding. That's why it's risky. It's better to wait, have an impulse, have a correction, and get above, even though it's not the same risk reward, even though you're losing profits. This is safe, and you can go to retest the top. I have it as your target, but it's just safe and better. So that's my thoughts about it. Now you can use whatever strategy you want. If you have some money liquidation things or whatever, you can use it, as long as you understand that this is a running flat and this is going to break the top. So I'm trying to be as transparent as possible with you guys, because I know there's many methods, there's many strategies, and it's not all about the wave. All right, the wave theory works, but there's people making it and getting profits out of other method, and I'm not the one that will tell you trade the wave theory, use the wave theory, it's only good thing. No, the wave theory works, it's fine, it has a logic behind it, it's super interesting in my opinion, but you can use whatever it wants, as long as you keep in mind that this is a correction and that you have an impulse. So this is the main thing to keep in mind. Impulse, correction. I don't think there is resistance and support, but if it helps you out, you do that. So it's whatever you want, as long as you keep this patterns, this wave, this impulses, correction as your main thought process, then you can do whatever you want. All right, so I'm not gonna say support and resistance doesn't work. I think it doesn't work, but I think people are still trading it. So for example, this right there, let's say this move, I know that people traded right there because there was a trend line, so that's why we got a reaction right there, for example. So I'm not trading those trend line and support and resistance, but I know that these exist because people are trading it. It doesn't exist but because it exists, it just exists because people are using it, and the fact that it exists just helps me out on my trading. Because for instance, this setup came because people were trading that support, that trend line. And these setups, we know it's buy setups, it's correction, but it happens because people are trading this. So for example, let's use this one right there. So people are alright, let me just remove this and makes it better with this one. So I know for a fact that people are trading those and thinking, all right, wait for the breakout and the pullback. So they say wait for the breakout and the pullback. All right, so you may think this is a breakout and a pullback to go up because you have one touch, two touch, three touch, or whatever you want. To me, it is not. To me, it's an impulse and a correction, and it's better like this because see, this was all right. This is a touch. This will go down. No, it didn't, because it was an impulse and it was a correction, so it was going up. You could have say, all right, this was a touch. This is going down. It didn't, because you have an impulse, you have a correction. So the line doesn't matter, doesn't exist. People are trading it. That's why you get reaction on it. But it doesn't mean that it go down or up. It's just, it can be, you can say, it's a fake out or whatever you want. To me, or to any wave traders, you have your impulse, you have your correction, that's enough. No need to trace it, to make some lines like this. No need anything. Just understand impulses, correction, and it's enough for you to take the next impulse. All right, so impulse, correction, next impulse, and every time frame it works. Impulse, correction, next impulse, impulse, correction, next impulse. And now we're gonna go in the bigger time frame, and it reminds you that for this one it could be an impulse, correction, next impulse. All right, I'll even go on that one to tell you that you have an impulse, correction, next impulse. All right, this looks like XMR, looks like this, looks like this. All right, Ethereum will come and break the top, like it or not. This will happen because it looks exactly the same. It's always the same thing. As long as you understand impulses and correction, then you'll ride the next impulse. That's it. So there's nothing much to say. I'll do Ethereum another time. All right, I was not expecting this to be a long video, so I'll do Ethereum another time. But that's it for Bitcoin, and I hope you guys liked it. I hope you guys just learned something out of this video. I was trying to be as clear as possible and let you know that this move is upside. Don't listen to the FUD. Always follow the structure, follow the chart. This is what will tell you about the upcoming move. This is an up move. This is a correction for this impulse, and don't get baited by those small corrections. So those small dip. Stop saying it starts to bleed, it will go down, it will dump, Putin's speech, World War 3, whatever. As long as you're above this low, it's going up. And if you break that low, as long as you're above this one, this is still a bigger structure. If you break that one, then we're gonna start asking questions, right? So focus. As long as these two we're above it, we're in an uptrend, and this is going up. So see you in the next video where this top will be broken. Peace.